Since the start of human civilization, across empires and kingdoms, if the only thing that has been common till date and today is gold, one thing that has been continuous in flow, either in physical format or in monetary format, has been gold. Till date, nearly 200,000 tons of gold has been extracted. Visualize what 200,000 tons of gold looks like. Just imagine 10,000 Eiffel Towers in front of you. 10,000 of them. That's equal to all the amount of gold that has been extracted till date. And also, if you want to imagine what 200,000 tons of gold looks like, imagine the ship that was stuck in the Suez Canal a year and a half back for a week or so. That is the amount of gold that has been extracted till date. So our question begins, can you become rich by buying gold? Simply gold. No equity, nothing. And what are the mechanisms to buy gold? Like what physical gold is best for you, or distilled gold, or any kind of cube or boxes that you buy your gold from Dubai or somewhere. Which kind of gold investment, if any, you are trying to make, which investment would reap you better returns? We will compare SGBs, both primary market and secondary market, what is beneficial for you. But first of all, you have to understand where all this $200,000 of gold is situated. So about 50% of that is in form of jewelry. Your house, my house, and everybody's house would have some or little amount of jewelry. Everybody has that. Indian household hold nearly 20,000 ton of gold. Thus, out of every 100 ton of gold is extracted, 11 ton is with Indian women's. Now 50% is gone with the jewelry part. 20%, just 20% is in form of coins, gold, ETFs, and mutual fund, etc. Whatever the digital and other investment kind of thing that you make is just 20% of that. And 18% of it is with the central banks like India's RBI or US Federal Reserve. 18% of global gold deposit that has been extracted till date is with the central banks. They control and liberalize and sometimes constrain the demands of gold and also its prices in the international market. And the remaining 2% goes into real world application like in chips and semiconductors and all these things. So gold is not just a jewelry ornament or some investment instrument. It has some real implication in real world also. So after understanding the distribution of gold and where it is situated, the question arises, why to simply invest in gold? Why gold? There are many asset forms, from commodities to everything, equity, real estate. Why I should prefer gold? First of all, like in last 40 years, the CAGR that gold has delivered is 9.2%. And if compounded properly, if you would have held this for last 40 years, then your fortunes would have changed. In the last 20 years, it has went up from 4,400 in 2000, year 2000, and today it's around 71,000 in 2024. That is 16x, 16 times in just 24 years. And the biggest plus point of gold over other types of investment, especially the equities, is that these 40 years that we have quoted that it has given 9.2% return, it has just given 7 years of negative return. That is, there were only 7 instances in a whole year that gold was down. That is a very huge feat. And also, even the maximum drawdown has been in 1998 with 14%. Meanwhile, stocks can easily given drawdown of 40 to 50%, at least 2 times in the last 2 decades, if not more, in form of 2008 and 2020. What set gold apart from other asset classes? Like when the world is in distress, then gold shines. You can take any example. Whenever there is a problem, in 1979 when Russia attacked Afghanistan, gold shot up. Fast forward to 2008, global financial crisis, gold shot up. 2020, gold shot up. Anytime the global market face any difficulty, gold shot up. Gold is the first thing to go up. Now, being in India, it is a unique opportunity for you to invest in gold. Like worldwide, what is famous? There are many gold bonds, but I don't think anyone is as competitive and as better packed as SGBs. SGB, what are SGBs? Sovereign gold bond. So basically, it is a virtual gold that you purchase and you get a sovereign warranty from the Union Government of India that whatever be the gold prices, you will get those appreciation plus a certain amount of interest that currently stands at 2.5%. Initially, when it was launched, it was at 2.75%. Today, it is at 2.5%. The biggest plus point is the capital appreciation that you get on these SGB are tax-free. Till date, nearly 60,000 crore worth of SGB have been issued by the government. And you can start with just 1 gram. So, as we have seen, you can invest in gold via ETFs, SGB, and SGBs are also of 2 types. In the primary market and the secondary market. Primary market is what? when the government issues it and banks, you can take it via banks or something, you can subscribe to it. You get a 50 rupees discount on the, because you are transacting it online. Otherwise, that is the price of the gold that day that you pay. In the secondary market, the gold is generally cheaper. 3 to 4% is the average discount that you get today when you buy from the secondary market. So now you combine that 3 to 4% discount with the 2.5% annual yield that you get. It's around 6.5% at max. So you can easily beat the first year FD deposit with these basic fundamentals. And now let's apart the gold appreciation part. That, as we have seen, that it is around 9.2% yearly. So 9.2% plus 6%. If this is the return that you get, and that when it translates to 15% CAGR and 15% trust fee with the least drawdown of gold, like that, as we have seen in 1998, it has given 14% as max drawdown. 15% yearly compounding is a fabulous return. So the best way to buy SGBs is what? You can, just like any other stock, you can just log on to your broker and then you get search for SGB. And as you can see, that there is decent discount. Like current market price is like something around 7,300 and it is being traded at something around 7,100 or something, and even lower. So there is a pure discount of 3 to 4%. And also you get a sovereign guarantee and one product. Always buy the bond whose interest payment is due during your holding period. Like suppose if you are trying to hold it for 6 months and the interest of 2.5% is paid half yearly. So if you buy just the day after it has been paid, then it's not as good as it would have been that you get those 2.5%. So you should keep this in mind. Now let's compare physical gold ETF, SGB via primary market and SGB via secondary market. So what is the acquisition cost? Okay, so generally for the first three, physical gold ETF and SGB primary market, it's generally the market price. Whatever is the market price, you pay for it. But for the secondary market, it's a big discount, as we have seen that 3 to 4%. So point number one, acquisition cost is lower. Now comes to the capital appreciation part. Is the capital appreciation taxed? So generally it is taxed in all the cases, except if you hold the SGB till maturity. So if you hold the SGB till maturity, then you will get the capital appreciation exemption. So you don't have to pay any capital gains tax. Now, let's compare physical gold again with SGB. What happens if you buy physical gold? Do you get any kind of interest? No. In gold ETF or digital gold or these kind of things, do you get any interest? No. But if you buy the SGB, you get 2.5% interest on your capital. So that translates to, for a 1 lakh payment, you get 2,500 as a pure additional gain that you buy. If you're buying the same thing from the nearest jeweler, maybe like Tanishq or something, you won't get anything. But if you just buy the SGB, you get 2,500 free. Also, the one more negative point with the physical gold, you won't sleep tight. You will always have issue while sleeping that someone can sing into your home and take your hard-earned money. But again with the SGB, it's all sorted. You don't have to worry a little. It's all in the demat format. So now the question arises. So do you want to invest in gold? What means of gold investment do you want to prefer? I think now you know better. And from my side, I would say go with the sovereign gold bond. Thank you.